Okay, you are live, Armen.
Hi, Hendrik. Hi again. Glad to be on your podcast.
Yes, thanks a
Yeah,
lot. Thanks a lot for taking the time. I know the last time I had very good information from you, and I did something wrong, and I only recorded myself, which is pretty pointless. So this time around, hopefully, we'll get it right.
no worries, man. I'll just clean it up, everything. Yeah,
Yeah, I think be great if you start from the beginning, like you showed me the last time, so I can also have a recap.
yeah, sure, will do. So yeah, basically, we just want to go through some points of my strategy and some rules that I never break. Yeah.
Okay.
And just to start with, I wanted to say that I am trading actively since 2018, and I admire it a lot. This is my hobby, and it helps me to evolve as a personality, to master my emotions, and to hear my inner voice. Yeah,
That
and
yeah, the patience definitely. I can
yeah,
definitely see it works on your patience.
yeah, absolutely. And you know, there is this popular saying that 80% of trading is emotions, 20% is technical. So basically, soft skills, just like everywhere, just like in life, yeah, soft skills, emotional intelligence is more important in trading than hard skills and technical analysis.
Fully agree. Definitely fully agree.
Yeah, but yeah, in order to master emotional aspect, you have to follow this simple rule that if you are a trader, um, if you trade like time frames lower than monthly, then you always have to use stop losses. Until and unless you start using stop losses, you will never become profitable as a trader.
I must say, Armin, what you're saying now is the single most valuable lesson that I've learned in the last month as chief executive trader of DXS is just that single point. In the past, I used to double down on trades, and then this thing would just go sideways, and I would lose 3 times on a single trade. And like my stats are showing, I've got a 26% profitability rate, but I'm not burning through my capital because
Yeah.
I have got stop losses, just that very small little parachute that helps me a lot.
Yeah, precisely. And the best analogy here, also a quite popular one, but it clicked with me that trading is like shooting from a gun. Yeah, and you want to shoot from a machine gun, not from these one-shot sniper rifles.
Yes,
Uh,
yes, yes, yes.
yeah. And so, yeah, the better your risk management is, yeah, the lower risk you take on each trade, the more ammunition you have, yeah, in your gun, and
Absolutely.
hence, and you don't need to hit it with every shot. You just need, you know, couple of shots to hit the target, and then
And
you're
that's
good.
and that's very
Mhm.
true because like I said, with my percentage, it's not great, but I'm not losing money fast. It's a little bit of trades and I would lose $3 or $4 in a trade and I'll make back the next trade at maybe $20. So I automatically cancel 5 or 6 losses out just by doing one trade. So that's something I've never, well, I kind of knew it, but I had a different, more aggressive strategy. And I think I needed
Yep.
I needed to turn down a bit.
Yeah, makes sense, Hendrik. Makes sense. It takes time. Yeah, no rush here.
Yes.
Yeah, on DXS, we specifically designed the risk management system in a way that is like very easy to protect your position with a stop loss. And the worst thing that can happen is when your green position turns red. And that's why on the DXS we implemented so-called double click risk management. so that you, when you have like a profitable position, it takes just 2 clicks to protect it.
Sure. I
And
didn't even know that.
yeah, we will soon publish a video tutorial to show it.
Fantastic.
Yeah, it's a pretty great tool. Helps a lot, and that's why we already achieved like 32% of our active traders are profitable on the excess
That's
on the long
very
run.
good. That's very good. And hopefully I can be one of those 33 very, very soon.
Yeah, exactly. Exactly, Hendrik. So yeah, let's get started with some technical analysis stuff.
Okay.
And I will be referencing some influencers and people who taught me, not personally, but whose public materials taught me a lot. And the first thing you want to learn about technical analysis is that you want to trade in the trade zones. Yeah, and you want to set up the trade zones in advance.
Got it.
So you just analyze the chart using the highest time frame available or feasible. Yeah, and identify trade zones. The higher time frame you use to identify the particular trade zone, the better, the more powerful would be these trade zones. Yeah, and we will now discuss just how to identify those trade zones.
Okay.
So basically, we're now talking strategy of trading, and strategy is not execution, because execution is like tactics. Yeah, and the strategy is specifically identifying those high time frame or middle time frame trade zones where you will be applying tactics, and entry tactics, entry strategy.
Okay.
So
Understood.
this is yeah, a strategy is one big part, and on this podcast we will focus on strategy mainly. So I use 2 tools only to identify trade zones, which are horizontals and diagonals, right? And for horizontals, you can and you should use candlestick analysis and Fibonacci retracements to identify strong horizontals. And for diagonals, I'm using trend lines and pitchforks.
Got it.
And I don't use momentum indicators, nothing like that. I don't use, I use nothing else, basically. Yeah.
That's
And
that's
when
also sorry to interrupt, Armen. That also
Mhm.
to me was my biggest problem in the past, because I had a chart full of 1,000 different indicators and they would all clash with one another. And it seemed to become a little bit easier recently when just listening to your simplistic charts, diagonals and horizontals. It helps me also to see everything better.
Well, it took me like 3 years to understand what does this saying less is more mean, really. So it's like the usual path you need to go through. You need to study everything. And yeah, when you learned it yourself, then it just works better for you. So there is no issue with having noisy charts, yeah, with trying a lot of stuff, trying a lot of stuff in the same time. But yeah, eventually it's well, for me it was beneficial to adopt this less is more mantra and to focus on very small number of indicators
Understood.
and tools. So let's start with horizontals, right? And that's the most powerful thing you can use. You can only trade horizontals. And the guy who taught me about horizontals the most, his name is Don Alt. He is one of the most famous crypto traders on Twitter. Yeah, and I know you know him as well.
Yes.
He also holds a podcast sometimes, or he used to. Yeah, and yeah, let's start with Bitcoin chart as an example. And I'm using Bitfinex exchange because to the best of my knowledge, big whales and big guys trade on Bitfinex because Bitfinex provides the most honest liquidity. You know,
Okay.
even though the absolute numbers may seem lower, but there is less wash trading there because they
I
don't
see.
care about little traders there. They service big guys.
Understood.
Yeah, so wash trading is not that important if your target audience is are big guys.
And the user interface make it very clear because it's kind of difficult to trade on there if you're starting out.
Yeah, you mean user interface where?
On Bitfinex.
Oh yeah. Well, I wouldn't say it's very clear. If I think it's pretty standard, well, in my opinion. But yeah, it's a spot exchange, so
Mm-mm.
they focus on spot trading. Yeah, their derivatives tools are less advanced than Binance or OKX, for example.
Okay.
Yeah, so let's find some strong horizontals. Yeah, what I do, just start from the highest time frame. Yeah,
Okay.
and here you can see like a lot of green candles with one red candle in the middle. Yeah,
Yes. Okay.
it means that no matter time frame you're watching, you know, uh, one red candle surrounded by green candles, or vice versa. You know, it's a big sign. Yeah, and you wanna, especially if the price is maybe
Reacting.
close, yeah, to it, you know, you have to draw this line on the chart. No, but here we can see that it's like pretty far. It's 14,000, so we're nowhere close to this number. So we really don't want to put a noise, you know, on this chart,
Yeah. Yeah.
especially for demonstration purposes.
If
So
if
yeah,
you if you sorry to interrupt, if you analyze something that hasn't been around as long as BTC, you would just obviously narrow down to monthly kind of thing, right?
yeah, yeah, exactly,
Okay.
or low.
Okay.
Yeah, but the higher the time frame, the better. Yeah, obviously,
Okay.
because and actually another big insight for me, and unfortunately I can't remember who taught me this, is that a candle is not just a candle. Yeah, a candle is a battle between buyers and sellers, between bulls and bears. Yeah, and if it's a yearly candle, it means that the battle lasted for a whole year. Yeah, and the result of this battle, the result of this intense negotiation, people losing and making money, is the closing and the opening of the candle. Yeah.
Got it. Yeah.
So this particular candle, it opened here and closed here. So these two numbers are very, very important because
I
these two
see.
numbers are the result of a 1 year long of tough negotiations. Yeah, closing the opening are more important than the high and the low, but high and the low are also can be used as a reference point when the price is close to these levels.
Okay.
So a candlestick analysis is the single most important part of the technical analysis you need to use and try and to master.
Okay.
Okay, so let's go lower. Let's try like 9 months, for example. Yeah, don't say anything important here. Or actually, Actually, this is an important level, right? The
opening
the closing of the 2020 and the opening of 2021. So we
and
can
when
just, sorry?
and will you mark the body or the wick on that particular level, or both? Well, it's so close
The
to one
body.
another, but if it had a long wick, for example, would you mark the body?
No, I always prefer the body. Yeah, if
The
there is a
body.
body nearby, I always pick the body.
Okay.
Body is the, well, for example, if you buy a house, yeah, you negotiate the price. Closing of the candle or body of the candle is the final selling price of the
Good
house,
analogy,
right?
yes.
Yeah, and the high is just some certain number that you bid it or the seller. So
One more question. Is there something in relation to, if you take it 2021, the long body with the long wick and then you've got 2022, which is the short body with a very tiny wick. Is there some significance between that or not really?
um, well, not, I don't see any, this body is
Okay.
not really short. Yeah, I mean, it's short relatively to this one, but really for demonstration purposes, again, here, price is trading near to this,
Okay.
the bodies of these candles. Yeah, so why would you care about this week?
Yeah, because I read
Yeah.
something, or it's again some guy on YouTube. He really goes into candlestick patterns, and then what he does. I know it's irrelevant, but that's what I'm asking. He
Mhm.
draws a Fibonacci on the candle, and then he's got certain rules that identify that particular candle. So, for example, if you get to a doji, and your hammer or the body is within 30, what is the next, 38%, it's only going to be it can only be called a doji when it's that. But if you say it's insignificant, then I'll rather leave it.
Frankly speaking, I need to study this particular strategy.
Okay.
If you can show it to me, like next time, maybe we can discuss it. But
Okay, fantastic. I'll
really,
get
like
that.
just yeah, based on your explanation, I can't say anything really.
Okay, understood.
Okay, so we identified the first horizontal close to, or pretty close to our current price using the yearly candles. Yeah, so let's go lower and check out if there are any other important horizontals here. Yeah, not yet. Do you know how can I remove it?
Say again.
Sorry. I guess you don't see it, but this zoom toolbar is extremely annoying. Yeah.
Oh no, I didn't see that.
Okay. Now we're on monthly. What was this? 2 monthly? Okay, on monthly, we can see a very good example of an order block. Yeah, like an extremely narrow candle here.
Yes.
Yeah. And this is usually like very important. Yeah, and whenever price comes closer to it, usually this lever gets tested and it becomes the pivot point. So it's like
And
we're like 11% away here. So pretty close. I'll just mark this level as well.
okay, and that order block, if it's a green order block, would you mark the closing of it, or you'll always mark, let's say the order block is slightly bigger than that doji there. Let's say it's maybe 2 or 3 millimeters. Which one would you mark? Let's say if it's green, the top one, if it's red, the bottom one, or would you just find somewhere in the middle? In that case, it's very tiny, but sometimes you get an order block which can make a significant difference. But I always don't know. Do I
Well, you
use
mark both.
both of them? Okay.
You mark both, but for this, it's like
Yeah, it's
this
almost
is
nothing. Almost nothing. Yeah.
50%, so yeah, doesn't make much of a difference really.
Okay.
So keep the noise low on the chart. By the way, we forgot to mark this horizontal. So we say like yearly close 20. Yeah.
Okay, got it.
For this, we say like monthly order block. Right.
Got that, yes.
Yeah, let's go lower then. Mm-hmm.
Just one, Armen, don't I just want to go one step back again? I just want to ask you about something.
Sure.
I think it was 2 weeks, the 2 week time frame. So you see the order block just before the green candle, 2, 4, 6, 8 weeks ago.
8 candles ago or what?
No, 8 weeks. Say 1, 2, 3, 4, 5 candles ago. The little red the red doji there next to left. Yeah, that slightly right. The
Okay.
red candle before the big green one.
This one?
2 more right.
Oh, okay.
That one, yes. So obviously that's also an order block close to current levels. Is the 2 week, is it worth marking out or not really? Because it's so close to the current levels. This is what I'm struggling with, because sometimes you get a lot of order blocks close to the current levels. So my challenge I'm facing is, are they significant or not?
You just have to go through all time frames and look for the most significant order blocks you can find.
Okay.
If you can find something, you can't find anything more significant than this one. Yeah, sure, you should mark it.
Okay. Because
That's why
no,
we are
never mind.
going through all time frames now to make sure that we find the most significant old order blocks as close to the current price, right?
Okay.
So it's pretty easy here. You have to learn how to identify more and less significant horizontals.
Okay.
That's the goal. Yeah, hold on a second. Okay. So really can't find anything more significant here. And you can go back and forth as many times as you need, obviously. Yeah.
Yes.
So since I couldn't find any order blocks on the like weekly time frame, yeah. I mean, this one seems pretty narrow, but it's not like, this is not that narrow. I would say these 3 candles seem pretty important, but especially this one, yeah. This is the
Yes.
narrowest candle of all here. Let's just double check the 2 weeks again, 3 weeks again.
Yeah, because if you would put that into a 3 week, it will form that green candle.
Yeah. Okay, so on the weekly level, I can see this very significant order
Yes.
block. Yeah, because it's like one single green surrounded by very long and red candles. So, but you don't want to mark it because it's already too far away and you have the yearly level here.
Yeah,
So
exactly.
when we get close here, you mark it up. Okay, so here I don't see anything important. Let's try monthly again. Monthly, really, it looks like we are in the middle of nowhere here. It's like a sort of a no trade zone. Yeah, you can call it like a no trade zone here. Yeah, so the BTC best advice would be not taking long-term positions at the moment.
Okay.
Yeah.
That does look like it's almost in the middle of that of your trade zones. Would you then use Fibonacci's to try and find some levels there or not yet?
Here, you
Yeah,
mean,
between the
well, we're now looking for a high time frame trade zones, right? And you know, BTC provides a lot of good order blocks. So Fibonacci's will be secondary tool to identify
okay,
horizontals,
okay.
support blocks. Yeah, because you use Fibonacci as primary tool to identify horizontals if you don't have enough price action,
Understood.
and high price action. So yeah, based on some high time frame horizontals, I would say that you just wait. You just identify a trade zone here, yeah, and here.
Okay, and sit in your hands.
Yeah, and yeah, the shorting trade zone should be red. Yeah, keep it very tidy, very beautiful. Yeah, pay attention to details on the chart. Just enjoy drawing it, really.
Okay. That's also a point that I'm busy making now is every time I do analysis on a chart, when I do it again, I clean it and I do it from the beginning to start training my eye to see more things. See more, but mark less.
Yep. Yeah, absolutely makes sense, Henrik. So we're really not much we can do here. So let's just
So am I right in saying if
Mm-hmm.
BTC looks like that, then maybe it's not worth even trading any crypto at this point? If
Yeah,
BTC is
maybe
uncertain.
not taking long-term positions. That's for sure.
Okay.
Yeah. But for example, we can forecast like potential bottom or potential top. Yeah. Yeah. For example, yeah, this is a major level here. Yeah, this one.
Oh yes. Yeah.
Yeah, it's year 2017. Year close 2017. Yeah. So if price goes down and takes out these lows, probably this is where it's going to get a bounce.
Okay. Okay.
And same here. Yeah, and it's like 2021 high. Yeah. Very close 21. Yeah, and obviously just to support your your horizontals, you can draw some Fibonacci levels, probably using monthly. So here's the trend, the low, the top.
How do you determine, Armand, from that or few candles on? There's another big red reversal candle, but in the
This
back there's
one?
also some. Yeah. So how do you determine which one do you choose for your Fibonacci?
I want to find the trend.
Okay.
Yeah.
Okay.
Why
Okay.
this is the trend and not this is the trend? Well, because this is lower than this, right?
Okay. Go back a little bit left, a little bit back in time.
Yeah.
You would not necessarily draw it from that bottom there. Was that too far back?
Yeah, well, you can see that the first time this trend finished, you know, because
Okay, I see. Yeah, I see what you mean.
one of the waves, yeah, probably like you can see, can't really see the waves here much, but you see the red
Yeah, I see what you
candles.
mean though, yeah.
So this is the start of the last wave of this trend, this red candle, yeah, and this was taken out by this retracement.
Okay.
Yeah, and so this low was not taken out. So this trend, this is the continuation of trend that started here. Okay.
Yeah, got it.
This is continuation of the trend that started here, and this is the tracement within the trend. This one. And you can see the 3.2 Fibonacci retracement here, pretty close.
Yeah, very nice.
Yeah, and then I don't see any value in Fibonacci's here, really, frankly speaking. Let's just remove the noise. We have like super cool levels drawn on the chart. And I suggest that we simply apply diagonals. And diagonals, especially the intersection of diagonals and horizontals, they help you to time the entry, to time the trade zones.
Okay.
And the primary tool I use to identify diagonals is the pitchfork. So again, you have to draw for, you need to identify the trend. Yeah, and here's the trend. Here's the low point, the lowest point of the trend, and here is the highest point of the trend. But you really don't care about the highest point of the trend to draw pitchfork. You care about the highest point of the first wave of
And
the
then
trend.
the third point, yeah.
Yeah, and then the first low of the trend, which is this one.
I've been playing around with that pitchfork after you showed me last week. It's incredible how certain, if you look at historic data, how much of everything ran into those channels. When they broke, you could see volumes. You could see at the bottom the volumes when it broke that channel. And as it stayed in various channels, it's very powerful.
Yeah, and it's a proof that markets don't move randomly.
Correct.
Yeah, you move in cycles. Human emotions, drive the markets, and human emotions are just as cyclical as markets.
For sure.
Yeah, and when we draw this pitchfork, yeah, it will be like the perfect proof of it. So the shift pitchfork is the most popular type of the pitchfork usually used, but whenever you draw it, just connect these first three dots of the trend and try different types of pitchfork. So this pitchfork, you can see that when we got this low, yeah, we could have drawn it. Yeah, and then
just look at that.
yeah, when the price got above the middle line of the pitchfork, it's here. Yeah, it was like a sign of strength. So whenever price moves from this floor of the pitchfork to the next floor, you automatically assume that it will just hit the ceiling of this floor.
Okay.
So then it moved above the upper median line. Yeah, same thing. It's above, you assume it goes higher to the next ceiling of this floor. This is
Armen,
the floor.
can you do me a quick favor? Yeah, I just want to see that values, that particular values that you've got in your pitchfork, because obviously mine comes with, because that also is significant to me. Okay, I've got that. I'm going to screenshot that later on. I'll add it to the video, to the description.
Yeah, true.
Okay, thank you.
Yeah, no worries. Then we hit the ceiling of the next floor. We break to the last floor. Well, there can be as many floors as you draw, obviously, and they will all matter. By the way, you can add 4, 5, 6, yeah, and it will work the same. The logic is the same.
It's amazing if you had that pitchfork, you would have known exactly when the top was.
Yeah, and then it precisely predicted the top
Yeah.
of the entire trend here, right? And by the way, if you use Binance chart, it's not the same. That's why, like, try to identify the most honest exchange
Okay.
before doing your technical analysis. Yeah, and as you can see, the floors are working always. Even after the trend is finished, the pitchfork of the previous trend continues to play a very significant role. Yeah, and then stops here, bounces here a little bit, breaks down the floor, immediately accelerates to the upper median line.
Yeah, it's incredible.
Yeah, when the price is close to in the middle of the pitchfork, you just add some more levels, 1.5, 1.25, yeah. Just use the halves. All
So the
these, yeah.
pitchfork, mine currently is Fibonacci levels. So it shouldn't be that. It should be increments of quarters, or it seems to me.
Never used Fibonacci levels on pitchforks.
Yeah. For some reason, mine is
But you
default
can have,
yeah, but I'll change that.
yeah, that's why you have median line, yeah, here. You have upper median line and lower median line. And then all of the lines above and below upper median line or inside, they should be like the half parts of each floor. If you look
Okay.
at the waves, like sound waves, for example, they move in sinusoids, yeah,
Yes, correct. Yeah.
like this, yeah. And if you, for example, threw a rock in the water, the
The
waves
same.
will be
Yeah.
very even, right? So same works here. So this is the main part of the trend, yeah, the channel of the trend. Yeah, and these are the upper channels of the trend. This is the top floors of the trend, top channel of the trend. And inside every channel, you can add more and more lines. Inside every channel, you have more floors of each channel.
Okay. Very interesting, this.
So yeah, as you can see, this 1.5 line, this one, yeah,
Yes.
predicted precisely, just like here. Yeah, predicted precisely the top of this very recent uptrend we had from 16K to 31. Yeah, so the same thing happened again.
So I guess after it's relative easy afterwards to see where the top was, but I think the challenge comes in whilst you're in a trend to know which levels of your pitchfork is actually going to be the top or the bottom. I think
That's why you have to learn both the strategy and the tactics.
yes, correct.
Yeah.
This is what I want to say.
The pitchfork helps you to identify the trade zones. So when your price is here, for example, yeah, and you see it's coming close to the pitchfork, you can say that, well, first of all, I think you can find well, some very important horizontals here. Yeah, by the way, let's
And
just do
match
it.
them up. Yeah.
Let's just do it, yeah. to weekly. Yeah, for example, here is like a very narrow candle here. Yeah. It's like a pretty narrow one. Maybe 3 weekly. No, actually, this is the when your price was somewhere here. This is like the most obvious horizontal level you would draw. Yeah.
And you would, yeah, and you would put it on the bottom, yeah, or on both.
On both. On
Okay.
both, because it's like wide enough. It's like 1%.
Okay.
And so when you go to lower time frames, you can see some intersection here. Yeah. And the price touched the top of the pitchfork, deviated below the horizontal, tested the horizontal again. Yeah, went down, right? Okay, so here we can see a nice intersection of our monthly order block, which we remember is like we can even say that it's like mega order block because it's like incredibly narrow monthly candle, like 0.03%, incredibly narrow. So it's like extremely powerful, and this intersection seems like a very good area to try to catch a bounce, and to apply your tactics entry strategies, low time frame analysis when we get there.
When so you've got your mega order block marked out in that thing, which you then now reposition it on a more accurate level in that cluster on your left hand side where you originally marked it out.
I mean,
now on your left hand side where you started your line, you see there's a very tiny order block there close to your mouse.
This one.
To your left, even more to your left, exactly where the line starts.
This one.
Yeah, that one. Would you then reposition that line to kind of fit that narrative, or would you just keep it exactly where it is?
No, certainly not, because it's like I'm on 3-day time frame.
Okay.
And my line is monthly.
Okay.
It means that 3-day time frame, it was like a 3-day long battle, and the result of a 3-day long battle is nowhere near
not
as
the same,
important result of the monthly long battle.
Okay.
Yeah, and that's what you did in the beginning. Yeah, that's how
correct.
you identified horizontals.
Yes.
You scanned across different time frames, and you try to identify the most important horizontals, using the highest time frames available. And when you have a monthly horizontal here, then you don't care about weekly horizontals.
Understood. Okay.
Horizontals, yeah. You just have it here, so you just use it.
Okay.
So now we have a pretty good trade zone here. If it breaks down, we can do more and more analysis. We can add more diagonals, more horizontals here. You have to try find some trade zones below. But I think, it just showcases my point perfectly. And that ideally you just want to wait for this trade zone and try to catch a bottom.
Yeah, I see. Okay.
Yeah. When price gets here, you should never ever open a trade blindly. Yeah, you should apply low time frame entry techniques, which we will discuss on the next podcast.
Okay.
In details, yeah.
Okay, so you've got your range now, okay, but and that can range for months, going not either up or neither down. So you would then zoom into smaller time frames to try and get more shorter term positions.
Well, I would just look for some consolidation pattern. Yeah, I'll just go to lower time frames. you know, this potentially looks like a continuation pattern. Yeah, it can be a continuation pattern. It can be a reversal pattern as well. Yeah, it can be anything. So I will just switch to some altcoins and look for bullish or bearish setups there. Yeah, using
Okay.
again high time frame trade zones, ideally, because it's often that altcoins they just dump while Bitcoin is consolidating, or they
Yeah. Or
just
they
shoot
just go
up.
up. Yeah.
Bitcoin
Yeah.
consolidating.
Okay.
So whenever Bitcoin starts to move, you can get good trades with altcoins. Yeah, if we get a bounce here, you know, altcoins that dumped heavily, they can get a much more significant bounce. And because altcoins are in high time frame trade zones, you can set up very narrow stop losses there.
Mm.
So yeah, Bitcoin seems like in a no trade zone for me here, because after such a huge sell-off, a bounce should be expected. So you don't want to short it, really.
Mm.
And yeah, some people would just draw these trend lines here, like this. Yeah. And they say like whenever we get below, I go short. Yeah, it's like called breakout trading. Yeah.
Yeah.
But break tradings are uh, all about deviations, because usually, very often, you get a deviation below. Yeah, you get below it, and you get up, and you shoot up. Yeah, trend lines are such trend lines, especially like low time frame trades and trade lines, they print deviations all the time.
And if you let's for example say you would take that trade, that let's say on a smaller time frame, let's call it a 3 minute time frame, and it's almost impossible to get an exact level there. Once you confirm that this thing is up, would you do a market order, or would you still look for like a proper level that you would enter?
I personally would not focus my energy on trading low time frame
Okay. Okay.
trade zones,
Okay.
because
That's
this is
all.
like a low
That's
time frame trade zones. Yeah, there is no chance or very little chance that strong trend starts here. Yeah,
I see.
better focus on some altcoins which are somewhere near or inside high time frame trade zones, where there is a potential to catch a big move, at
Understood.
least the potential. Yeah. Then you trade low time frame entry. You take other low time frame entries. You catch low time frame move to pay for the risk, and then you run the rest of the trade,
Yes.
hoping
Okay.
for the big move.
Like Sui.
Yeah, and keeping the stops flat.
Okay.
Yeah, and by the way, I also wanted to show how to draw regular diagonals. Also, big thing to learn here. Yeah, some people say you have to draw from week to week. Some people say you have to draw from body to body. Neither is correct. You have to find the diagonal which the most of the touches. Yeah, let's just remove the pitchfork to keep it clean. And let's try to draw a trend line for this big trend here. Yeah, and I use this ray tool. Set up here. Yeah, I want to catch as many touches as I can, yeah. For example, here. Okay, so looks very promising. A lot of touches here.
Yeah.
Yeah, another touch here, even though deviationary touch, another touch here. More deviations. So can you draw a better trend line here? This is the trend line if you can draw a better trend line.
Okay.
Yeah, for this
Will
trend.
you use any moving averages or not really?
Well, when you start trading, when you just learn, don't use anything else.
Okay.
Just
Okay.
focus on very small number of tools and indicators.
Okay.
Just horizontals, just diagonals, and that's it. Yeah. When you feel comfortable, when you learned a lot, and when you practiced a lot using it, then you can add some moving averages and stuff.
Okay.
Okay, so well, this trend line, as we can see, was pretty important because the biggest down move started when we broke it.
Yeah. Also on the left there, yeah, in April.
Yeah. But can we draw a better trend line here? For example, if we use this or this, you see, you have more touches here.
Yeah, that's good.
Underneath, yeah. Yeah, also potentially a good trend line, but yeah, also pretty good one. It also could have helped you, like here, yeah, for example, because you got a few deviations here, but this deviation was like a killer deviation. And
with the horizontal, yeah, it's a good
and a
reversal
good
there.
intersection with horizontal. It was like an amazing trade zone here, actually. Yeah, deviation, both with the horizontal and diagonal. So what would be our current downtrend trend line? Let's try to draw one.
It's amazing when you I already see one, but in the beginning I didn't. But I already think I know, yeah, which one I would have taken.
Okay, so we have like a few touches here. But it's like too far-fetched. Doesn't help, really. By the way, this guy Will Hunting on Twitter, he also taught me a very efficient technique of drawing trend lines. Well, for example, when you see like three tops like here, yeah, 1, 2, 3, yeah, you assume that this top is a deviation above above a trend line that is being created.
Yes, yeah, I can see that.
Yeah, and you should just connect these two dots here. Yeah.
Yeah.
By the way, this is the trend line. Yeah.
Okay.
But regretfully, the price never touched it. And I mean, it got close enough. You can say that the trend line resisted this move, but yeah, ideally you want it to deviate above it. So but there is still a good chance, yeah,
It
that
might go back up and hit it.
this trade zone may play out. Yeah. Well, if there is like a powerful short squeeze like that, then definitely it can be a very good short opportunity. Yeah, with like a triple top here. So yeah, well, you identify, you mark your trade zones, and you just sit and wait. When you get there, you apply low time frame tactics, entry tactics.
That's
and
very,
then, yeah,
very
you can
interesting.
just relax and watch. Yeah, if you're not you're not in a like risk-taking mood, Yeah, just relax, wait until BTC enters some trade zone, and then consider altcoins, consider trading BTC. Yeah, when BTC is in no trade zone, trading altcoins is always more risky for obvious reasons.
Okay, but in hindsight, if altcoins are always running with Bitcoin, then the altcoins should sit in the same kind of ranges at this point. Well, most of them.
Yeah, but that's exactly not the case. Well, maybe in 2017, 2018, they used to run mostly with Bitcoin.
Yeah.
But even back then, there was quite some exceptions. Well, right now, there are like a lot of exceptions,
Yeah.
and
Because
that's
they
why.
always talk about the
Mhm.
alt season, and then when Bitcoin goes down, all the alts they dump, and Bitcoin goes up, then Ethereum goes up, and then that kind of relation. But I also noticed that this supposed altcoin season or alt season doesn't happen that much anymore because they independently moved.
It just happens rarer and rarer and rarer
Yeah.
because we all know crypto market, crypto space is just a bunch of tokenized ideas, and the business model of each and every project is just to pump the token. Yeah, they
Yeah.
never
Correct. Never makes it to market.
they only care about dumping their token holdings. They don't care
Yeah.
about 99% of them don't care about adding value, creating product, showing some operational performance, because it's just when you don't have any numbers that people can follow, it's just easier to sell golden mountains, global ambitions and
Yes.
goals and stuff.
Getting rich
Yeah.
overnight kind of ideas.
Yeah. So alt seasons, they're just becoming rarer and rarer because market is getting
Mature.
smarter bit by bit. Yeah, at some point they will evaporate. Something else will come up. The Amazons, the Apples of blockchain technology will come up after the big cleansing. But yeah, altcoins probably were another one, maybe couple. You never know. But yeah, judging by the BTC dominance chart, if we get below here, below
What
this
is that
40,
that indicator that you just applied?
this one,
Yeah.
just a drawing,
Oh, it's just a drawing. I thought it's a preset
just a
indicator. Okay.
drawing, yeah.
Okay.
Because it looks like a rounding
Round bottom now.
thing, yeah, rounding thing, yeah. And this is something we will discuss during the entry tactics.
Okay. Okay.
So let's get rid of it. So so if we get a deviation above this level, then it's gonna be pretty obvious that we are getting an alt season. Yeah.
Let's see.
We'll go up a little bit again. Yeah, then like this. Yeah, by the way, if you notice, Bitcoin was going down together with its dominance. It's a very rare event.
Yes, that's actually one of my questions that I've marked here. Is why is that? Is it manipulation?
Well,
People
market
leading the
is a
market.
manipulation by design.
Yeah.
Market without manipulation is not a market. So it's just a rare event, and it means you need to pay attention.
Okay.
Let's see how it works. It's never boring. That's why we
That's
love
never
crypto.
boring. That I can say.
Mm.
Sometimes I wake up in the morning and I see everything is green, and by the time I've got my finished coffee, all my flat stops have been triggered. It's incredible within 10 minutes.
Yeah. Yeah, pretty crazy.
Mm.
Pretty
And
crazy, Henry.
Will
So yeah,
you
let me know
apply?
any more questions. I think I'm done for my side for today, but I'm happy to address your questions or concerns.
Yeah, no, look, most of it you've covered. I mean, one of the key things that I wanted to ask was about the Bitcoin dominance and the price going down. And it just, well, you just said it basically. It's so you've answered that. A question that I've got regarding your order blocks. When you look at various times, it is fine when you see a monthly order block, let's say at a resistance level. You've got a very dominant monthly order block. And if you go closer, there's maybe an order block on a 2-day. It is actually fine to combine them as a trading confluence. It's a monthly and a 2-day. That's all right, is it? Or if you look for order blocks on a monthly
It just
basis,
adds noise.
is it add noise? Okay.
It violates the most important rule. You know, you want clean charts. Clean charts.
Okay. Okay, understood.
The most important rule of technical analysis is less is more. Less is more means clean charts. Yeah, and yeah, if it happens that on very low time frame there is like this 2-day order block very close to the price, then you can use it, you know, as a horizontal.
Let's say there's nothing else. Let's say there's well, I think I'll share the coin. I can't remember which one. I've made some notes somewhere. But sometimes when you look for some order blocks, you'll see a very dominant one in the monthly, and you as you go in deeper, or let's say in smaller time frames, you just find nothing. And maybe my eye isn't trained enough yet, but then sometimes you see a dominant one that's on 3 days, even closest possible to that level. So that was what made me ask the question is it actually fine to use support and resistance levels as a trading zone, but from various time frames? You know, I understand it adds noise, but if there's really nothing else, is that significant?
It's still noise. It's still noise. You have your trade zones on the chart, yeah, and you don't want to add more noise. But
Understood.
when you are planning and executing entry, you go to the very low time frame, and then you don't have like high time frame horizontals close to the price there. Then temporarily, yeah, you look for like, because 2 days is very high time frame relative to like 3-minute, 5-minute
Yes.
time frame you're using to identify the entry and stop. Yeah. So if it happens that there is like a 2-day order block close to the current price, which is like deviating far below the horizontal, the high time frame horizontal, for example, then yeah, it makes sense.
Okay.
But yeah, just keep it on the chart temporarily.
Understood.
Because most likely after it got tested or deviated, it will no longer play a significant role in the future. So you don't want this noise to be there.
Well, that's it. I mean, all the questions that I've wanted to ask, I ticked off, and I made some notes whilst going through it. So, yeah, I'm a richer man today. Not because of the amount of profit I made, but I learned again a million things from you, and I do appreciate all of that and the time that you take. I do understand that you're running a very good and a big business at this point. So, thank you for taking the time. I'll continue to.
Absolutely, Henry. It's my huge pleasure. Huge pleasure to talk to you and to chat with you on Telegram. We're doing it on a daily basis, and yeah, I also learn a lot by talking to you actually. And yeah, it's always like it's a two-way road, as you know.
Fantastic.
And yeah, let's do it again, like in a week or two.
Yes, absolutely. Thank you so much. I really appreciate it. And happy to see that the BSV and the USD liquidity pools are merged. So it means when I'm ready to take a lot of profits, there's a lot of profit sitting on the table for me, right?
Yeah, I mean, absolutely.
All right. Absolutely. Thanks, Armen. Really appreciate all your time.
Thank you, Hendrik. Have a good day.
Have a great day.